Yo guys, what's up? So these are the stats of my strategy right here, SDR. On average, an 88.46% win rate. You can't find this information that I'm about to tell you anywhere else. My strategy is mine alone. Just kind of like with, if you trade supply and demand, you could just search up supply and demand. Yeah, but there's different ways to trade it, right? It's not that easy because if it was, everyone would be profitable. Just like if, an ICT trader, you could go watch the ICT mentorship, but doesn't mean that you're going to have that unique mechanism. It's all about how experienced you are and how well you can put it together. In my system, no one has. I've never seen anyone trade exactly how I do. And when I tell you this system is nuts, you guys can see the results for yourself. This is just across one of my accounts, right? This is on my life portfolio, right? I have a 6-figure account. This is not even including any funded accounts that I'm trading, and I have over 7 figures that I've scaled into already on fundeds. And this works across anything, whether you're trading live accounts, fundeds, whatever. It's gonna work. And I'm going to show you guys exactly how effective it is. Okay, so obviously we're trading SDR, right? I'm looking for a whole bunch of things. Not only am I looking at Wyckoff, not only am I looking at higher time frame correlations, moving average, a VWAP. There's a whole bunch of things that I have that I look for, and you guys could also get access to my checklist guide if you guys want access to that. But essentially, with my strategy, the main focus of it is very strong levels of demand. Okay, and I'm going to show you guys exactly what that looks like. So I'll show you guys a perfect textbook example right here. Okay, so how do levels work? Right, how does my level work right here? So the first thing I look for on a level of demand is I look for a huge reaction off of the level. You get me? So when I see big reaction off of the level, that's when I want to get in. Okay, so obviously we're on the 4 hour right here, so let's go to a lower time frame so you guys could actually see what I'm talking about. But what do we have right here? Right, we formed a level of demand right here. So the next time that I see price reach in this area, I already know that it's going to be an easy buy off of this demand. Obviously, we are completely out of bounds for here, so we wouldn't have been able to execute on the position. But there's also other opportunities which we could easily capitalize off of. Okay, so if we go back on the 4 hour, I'll show you guys a good example if we could find one real quick. And let's take a look. So off the rip, let's see what we can find right here. So right here, we had a super good level of demand, as you see right here. So we'll go ahead and mark this off right here, and then we'll go take a peek at it on the lower time frame. Okay, we'll actually go on the 15 and then get a good look. Right, so on the 15, right, we're right here, right about here. Okay, so the thing about this level is what ended up happening, right? It peeled completely down through it, right? But remember, all of this PA is just noise. This is just price action that happened on the lower time frame, but on a higher time frame, this is literally just a wick. The overall move happened here on the demand, right? It did reject off the demand. We just had a ton of volume, and we just peeled down really heavy. But this was one of those positions where you could have just waited it out. And eventually we did come back to retest this level, and we had a big explosive move up. Okay, the thing that you want to do when it comes to these levels of supply and demand, using my system, not only do I have very accurate entries, I also mitigate a lot of risk. One of the things that I see people do too much is just set a position. So how I'm doing my positions is you have to, you plan the day before, you can mark out all these levels, but you have to actively be executing and looking at the market. Because right here, if you would have entered off of this zone, right, if you would have tried to take a long right here, price went straight through it. There was no rejection. There was no reaction off of this level. You always have to wait for a reaction, because if you would have waited for a reaction here, you would have never lost any money. You would have simply waited out the position up until it started going up. But obviously this is really late already, and this is like PM session. I don't like trading PM. So I would wait until the next day, and 12 is not too bad of a time to trade. You would have been here either on the 15-minute or the 5-minute, right? And once it closes, right, you would have entered. Your stop loss would have been below the demand zone, And I like giving it a little bit of hair of room every single time. And then your first target is always going to be the next high. So the first target for you would be right over here. This is my first target always, right? The next high that I could see. We could even go on this time frame so we could get a better look at it, right? So let's go back. I think we were just about here, right? So that would be my first target, this high. My next target is going to be what? The next high, which is clearly over here, okay? Right here, you guys can see. And then your next target would be this zone right here where there was resistance, right? And then past that, I would just start trailing my position. Here's an easy, really good time to just pull your stops, right? Once, like, I have a thing that I feel like you should never let a winning trade turn into a losing trade, right? Because remember, whatever comes up must come down, right? So you could be in a position where you're long and your bias is right, your entry was right, and it moved towards your direction. But if your timing is off and you hold for too long, the position could come right back down and hit your stop losses and you end up losing money, right? It's not that your prediction was wrong. It's not that your analysis was wrong. It's just that's just how the market moves. It's not going to go up indefinitely and it's not going to go down indefinitely. The market ranges and moves, it trends and it downtrends and it consolidates and it ranges again. So you have to know how to actively manage your trades, right? That's the only way to make money consistently through props, trading my strategy. Luckily, I teach all of that stuff, so you guys don't have to worry about like figuring it out, but it's something that you definitely have to prepare and learn how to do, right? Implementing my strategy is easy. You guys will see an immediate change in your win percentages, but it's not all about win percentages, right? It's about actually getting the result and learning how to manage your positions effectively, because you could have a really high win rate, but if you're not managing your positions properly, we could be trading the same trades, but I'm going to be making more than you because I'm properly managing every position. So for example, if this bar right here, let's say this black bar right here is our stop loss in this position, which is a solid position, right? Used in my strategy. And obviously there's more things that I'm going to be looking for, but this is just for simplicity sake. And obviously this is hindsight, but this is one of the positions that I did take. You guys are going to have to drag your stop loss at least to break even, right? Once we're at this third take profit. Okay. Now, past that third take profit, what are we going to be doing? I don't know why that just did that. All right, past this take profit, what are we going to be doing? You guys are going to want to start trailing your position here. This is a good time to start trailing. You're going to start moving your stop loss, right, up and up. So it's going to move to this area, which this area was your 12.3. So let's say if you're risking 1%, this is 1.3% in the bank. Even if the position goes down to here, you're still going to win money, right? Then it would be up to your next area, which was right up here, right? And then you just trail your stop loss. You just keep trailing, and then you start shifting your targets, right? Let's say you're at this point where this stop loss is a basically 3%. Your next target is around 4% almost, right? So if you have enough volume, you're going to hit the 4% mark and you can keep trailing. But if it doesn't, if it comes back down, you'll hit your stop loss and you'll make 3%. Like you secured the trade, right? Trailing is really how you maximize the potential of your trades, because you could like, I don't want to say predict, but you could really like analyze the market to where it's going to react off this level of demand, and implementing like SDR properly, you could like honestly see where the market's going to be moving consistently. But we could predict where it's going to move up and down wise, but you never know how big of a move it's going to do, right? Unless there's news and something like that. But you can't predict the size of the move. So you have to be trailing constantly to be able to make those micro adjustments and go with the volume, right? You're not really going to be able to capture the peak, like assuming that you're going to capture the peak right here, and then right here you're just going to have like a message from like the heavens that's it's going to tell you like, oh, this is the time to close your position. You're not going to know that, right? You're always going to, when trailing, most of the time you're going to either be hitting your stop loss or if you just set a predetermined target like a high, like a previous high or something, then that's what you'll hit. But a lot of times you'll just be hitting your stop loss because you're going to be trying to maximize as much as possible. But obviously these stop losses are adjusting and adjusting and adjusting. Like this stop loss right here, even if it hits, if you had it up here, it would have been a 1 to 4.7 trade, basically meaning 4.7%. For me, I risk 2% a trade, so it's going to be around a 9.4, I believe. So almost 10% in a single position here. And that's solid, bro. Like that's literally enough to like just quit the month and just be like, okay, like I'm good. Obviously, you don't have to. You could. I trade every single day. Doesn't mean I execute a position every single day, but I look at the markets every single day and I look at what I can get into. But this is just like the power of not only my strategy but my system. Like the methodology is the entries. That's what SDR does. But then also my experience in the market really comes into play when it comes to maximizing the potential of these positions, because a lot of people would have left up here. Right? A lot of people would have left up here, but I know how to maximize and capitalize as much as I possibly can off of these levels. And you see it time and time again. Another area where it was an easy, breezy trade, right? This demand zone we had marked out here. What do we immediately know about this demand zone? Well, we had a huge leg up, right? Big push in price. I usually like to see the candle that follows it at least 2.5 to 3 times the size. And yeah, we were in a good spot here. We had previous levels of support right here, and we had a demand zone. So we had two things going for us. And this was also a key level because this was a previous level of resistance, previous level of support. And you guys, I'll go ahead and mark out another thing here so you guys could kind of tell. This bar is going to show you guys this key level. I'll mark it like, I don't know, red so you guys could tell. Let me change the color, red. So this is a key level, right? We had a resistance area right here, and we had support all across here. So, and the levels are interjecting each other, right? We tapped into it perfectly here. We rejected off of this level of support, this key level, and we also created a level of demand right here, okay? What happened next, right? This candle, 11 a.m., right? What happened? We tapped into this zone, right? Let's go on the 5 minute. Let's take a quick look. Okay, and I hate TradingView, it always does this. Okay. Okay, boom. So here we're on the 15 minute. So what happened? Okay. So let's go ahead, zoom in to this key level, right? And right here, we had the reaction. This is exactly what we look for at 11 a.m., right? We reacted into this level flawlessly, and then we shot right up. So off of here, right, there is an entry on the 5 minute easily, right? The entry on the 5 minute was most likely somewhere in between here, clearly, right? There was an entry somewhere in between here, and you could have gotten in at any point, right? That all comes down to your timing and your discretion. But what I would suggest is you want to be very selective with these. You either want to see a bearish continuation or a bullish continuation of like two back-to-back, bullish candles, or you also want to identify some wicks rejecting off of this area right here, right? Now notice how we tapped into this level right here at 11, right? This would have been a bad time to enter because even though we did confirm the position super strong through here via this large rejection, we didn't see a large reaction and a closure above an open, right? Because remember, this candle opened up here and it closed right here. But that's why we would wait for the next candle that prints that closes above in a bullish fashion, which was this one. So realistically, I probably would have been in this position somewhere like around here in the middle, maybe around here, right? My stop loss would have been a hair below this level of demand. And my take profit is going to be where? This level of structure right up here. This is my ultimate take profit, like my peak take profit, but this is a very realistic one, especially with the type of market structure that we were looking at here, right? One thing you also want to know is this market was essentially ranging in this area. So targeting past here was a time that you would be trailing, because your next target would have been this high all the way up here, right? So you would have trailed your stop loss once you hit this peak right up here and you're like trading above, right? You would have brought your stop loss, right, all the way up to around this level of structure, this key level, right? Your stop loss would have been a 122.6, right? Then once it starts gradually raising, right, you would have been able to adjust the stop loss according to how much volume you're seeing. So remember, you're actively taking a look at this. So based off all these back-to-back candles, right, this signifies that there's a ton of bullish volume. So you could be a little bit more aggressive with how much you're pulling your stop loss to. I most likely would have wanted to pull it to this level of structure right here, because what happens, we see these large wicks right here. These large wicks signify that there was a rejection in the market here, right? Meaning that there's a very high chance that this position could turn around for me, because historically the market, once it touches this area, as you can see by all these touch points right here, it rejects off of it. Even though we did peak up, right, this is just noise at the lower time frame. On the 4 hour or 1 hour, this is just going to be one large wick. So ultimately you would have been stopped out here for a total gain of about, let's see, total gain of about 3%, or for me, since I risked 2% per trade, it would have been around 6.36%, I believe. So I hope you guys get the picture of what I'm pointing to. It is not hard at all to learn my strategy. Obviously, I'm just brushing over it very simply. It's going to take you guys, watching the videos in the SDR trading course that I have in my premium, to really understand exactly how to trade SDR. But luckily, I have a 7-day trial. If you guys want to go ahead and live trade with me and get access to everything that's on there, and I'm sure you guys will love it. I've never had a complaint. Whenever people sign up with me, they stay with me for a long time because of how much value I put into the premium. You can't find the amount of value that I provide anywhere else. So obviously take advantage of it. And other than that, I've said it before and I'll say it again. Binge as much content as you possibly can from me. I have YouTube videos that I'm going to be releasing consistently. Make sure you watch all of that. Stay up to date with everything. Stay in the lookout for the emails that I send. If you guys don't check your email, make sure to check it. It will be in the same email that you use to sign up for WAP. It should be on that email. I'll be sending you, informational stuff and a whole bunch of good stuff. So look out for those. And if for some reason I'm in your junk folder, drag me out of the junk folder. I've said it before, but I just don't want to make sure you guys don't miss out on anything. And yeah, that's essentially a little sneak peek on how effective my strategy is, around how effective SDR is and what it could do for you guys. You guys will love it. And yeah. Guys, this is me from the future. I'm sick now and I don't feel like watching the whole video. So if I fucked up anywhere in the video, oh well, we're keeping it real. But if you guys did enjoy the video and you do want to learn with me, look in the comment section below or in the video description. You guys are going to get access to join my Discord community. And right below that, I'll give you access to the checklist for the morning that I personally use. You guys could have it on your side monitor, maybe on your phone. It's literally a PDF that's going to basically tell you what you should be checking off in the morning to ensure that you're entering in a good position. But yeah, other than that, thank you for watching the video. Much love, and I'll see you guys in my community. Peace out.